When I talk about understanding accounting and financial information, this sounds rather dull, a little bit challenging to teach in a little video. There's a lot of information in the text. However, if you are ever running a business, working for a business, you need to make sure the company is profitable, knowing how to do many functions. I'm explaining a lot of this in here. And the definition of accounting is in the book. And one thing I do say, I don't know how many of you students are business majors. Accounting is an excellent major. Becoming an accountant, a CPA, I have never known an unemployed accountant who knew how to add 2 and 2. But it's analyzing the money in many ways, like to find out profitability, taxes, growth. You might be doing an IPO, which is an initial public offering, because you're going to put your business on the stock market. Many uses for the accounting, and believe it or not, it really can be quite fascinating. And it talks about inputs, processing, and outputs. If you're getting financing for your business, they want to know what the cash flow is. If you're bringing in $10,000 a month and spending $20,000 a month, not good. And it talks about what accountants' responsibilities are in many types of things here. And I know it sounds a little bit dry. Taxes, good to know. It is complex, but they do have a lot of software associated with it. I get my taxes done every year by a CPA, and I'll be honest, he runs it through the computer, and they can figure out within 24 hours whether I'm getting a return or paying in. And the managerial accounting is important too, because whether you're like, let's say you're making cupcakes, they're going to analyze these things, how much it costs to make the cupcake, market it, the budgets here. And even though there might be 35 cents of ingredients in that cupcake, you're going to have to retail it for $2.50, because you're going to have people in your store selling it. You're going to have to refrigerate. You might have to ship if you have different locations, or if you're selling to other places. And users of accounting information, the government especially, we file tax returns. And you go into the third line here, or bar, and it talks about people interested in your income, the creditors, and your interest rate that you pay on a loan is affected by your income and cash flow. The less you need the money, the lower the rate. And this is the financial accounting. You want to know if it's profitable. You're selling a business. Let's say you're partners and you're selling your share, and another person's coming along. They're going to want information. Publicly traded companies must issue an annual report. Tells you how to read one. They're rather interesting. They can be a little dull, but if you do some really poking and throughout there, you can find some things amiss. And if you are a stockholder, you can go to the annual meeting, even if you own 1 share out of 20 million. Talks about private public accountants and CPAs. As I said, it is an excellent occupation. A lot of people think it's dull. It really isn't. You're going to be crazy when it's tax time, quarterly things there, where you're not going to have much of a life. You don't want to plan on getting married or taking your honeymoon the day before April 15th. And it talks about improving accounting practices. The DODD-FRANK Act. We had a big financial crisis in 2008, big meltdown, mortgages underwater. They were doing a lot of shady things here, where people had a house that was worth, let's say, $500,000, and then it went down to $100,000. They had a $400,000 mortgage. That's called being underwater. And in this whole thing, only one person went to jail. And auditing, you're making sure the information's accurate. And just talking about fighting fraud. But it says not all auditors and CPAs are trained in finding fraud. What's interesting, they're talking about degrees in forensic accounting. At our college, they do teach a class on that. It is like CSI in the office, and you can find some really interesting things. And then you can be specialized. If you're trained in tax laws, it's complex. Good jobs to have. They'll probably never have tax reform in this country, and a lot of the tax reform that they do are for special interest groups. And then there's government not-for-profit accounting. If you're working for a nonprofit, you still have to report. For example, let's say you have a church that you work for. You have to send reports in constantly because you have to fill out forms knowing where things are going, the finances. Talks about the accounting cycle here. From analysis to recording, doing a trial balance, preparing a financial statement, analyzing it. You also have to be pretty patient and very focused. Bookkeeping. This is, you're not an accountant, but there is a demand for it, and I believe the salaries in this area can range from $40 to $60 an hour. And I have met a couple of people that actually do the bookkeeping for small to medium businesses because they don't need somebody on a full-time basis. They pay the bills and they do the ledgers where they check the transactions. There is a system called double entry bookkeeping. You got the ledger, a trial balance. The ledger, and you see these pictures here. That's kind of old-fashioned. A lot of this is computerized, but you have everything in there. I don't know if any of you have ever heard of double books, where some people, if they're a bookie or something, they're going to be recording some information, but they're not going to talk about the cash transactions that are coming in. It's like, let's say, I have 5 registers in my store, and I'm only declaring the revenue from 4 registers, but hiding the money from the 5th register, pulling some funny business. Yes, this has happened. Technology has really helped. They have QuickBooks. Again, we do a class at the college. I'm not trying to sell you on more classes, but these are things that are worth knowing that give you a skill set even before you have your degree. And you have financial statements, income statements, cash flow, balance sheet. Know how to read them. And this is the one thing here where you have assets equals liabilities plus owner's equity. You use that in your fundamental accounting. And again, this is the balance sheet. It's showing what the firm's specific financial condition is at a specific time. Your financial condition could be different on January 5th and February 8th, and it's a snapshot. You would probably want it to show it at a favorable time. Assets. That could be the furniture, the real estate, inventory. And then liquidity is the ease you can sell things here. If you have a clock, that's not very liquid. You might get $5 for it. But if you have some real estate on Park Avenue in New York, highly liquid, you'll probably have a bidding war. And then you can classify your assets. Things that can be converted to cash, fixed, such as the building, and intangibles. Intangibles are like patents, things that you've invented. Trademarks, they do have a value, but you can't put a cash price on it. Liabilities, I have bills to pay. And if I'm taking out loans, large companies often pay out bonds. So you can have short, long-term payments there. You have equity. You subtract the liabilities from the equity. You have retained earnings. I'm not going to make students do a balance sheet for a company. I'm explaining in this video the purpose of this accounting function and knowing what it is and how to read a statement. You might at one time be purchasing a business, and are you going to depend on your accountant to do it? I would say yes and no. The accountant could explain certain things to you, but you're the one laying out the cash to do it. Income statement shows what your profit is after costs, expenses, and taxes. You could have income or a loss. And however, sometimes the banks will keep loaning you money because they think you've got potential. A lot of businesses start out being unprofitable for many years. Amazon was one of them, and I also believe Priceline. I'm not sure about that, but it can take several years to reach profitability. You're not going to make a profit on day one. It's like you're opening up that bakery. You have to be prepared to have cash to pay your personnel, the rent, the utilities, the ingredients, and the marketing. And maybe in a few weeks, maybe a few months, you'll be earning a profit. And a lot of times the banks will be looking at your business plan and your projections to see if it's a viable thing where they're going to loan you money. When you were doing the Kiva project, you would be determining how viable their business is. Selling sand in the desert is not a good business plan. Then it talks in here about the income statement and the formulas that you use in there, operating expenses, taxes, what you're going to be adding, subtracting, what it equals. And then it talks what you get revenue. And just because I got $200,000 in checks last week, it doesn't mean I earned it. I have cost of goods sold, and I would have to subtract that, and that would give me a gross profit. But then you would have other expenses that have to be factored into this, such as taxes, rent, etc. And it talks about inventory. You have all those cupcakes on the shelf, and of course they have a limited shelf life, but you would definitely want to be doing FIFO, first in, first out. So if they were baked today, I'm going to ship them. Those are baked next week, will be shipped out that day. This type of valuation can affect your inventory value. Other parts here, operating expenses, mentioned that already. You buy equipment such as ovens and other things there to make your cupcakes. You can depreciate it. Cash flows, 3 major activities. You may be investing some of your profits in something else. You have operations, you have financing. You're seeing Starbucks, even though you're paying $2 for a small cup of coffee, it's still a lot of other expenses, as you know, owning the equipment, paying the rent, paying the salaries, paying the utilities, and of course the little accessories like the cream and sugar. And this is cash flow. If you're a seasonal business, you're selling Christmas trees, you're in trouble. You're only going to be selling, I shouldn't say in trouble, but you're only going to be earning revenue about 4 weeks of the year, maybe from the week before Thanksgiving until December 24th. On January 3rd, they're worth squat. And if you're doing something seasonal like selling Christmas ornaments, you need to have something in your business plan to make sure you can generate revenue during the rest of the year. I see these little Christmas stores in various locations. They often sell other things like birthday cards, sometimes candy, food, other seasonal items like for the summer, for Easter, Halloween, etc. And then it talks about this little thing here, what it is. You're making dog food. You're getting some revenue. You issued some bills today, let's say June 1st. and some of these customers are given 60 days here, are you going to be putting that money on there that's due by July 30th on there? Some people do that. It helps when you're getting the loan to say you've got these revenues coming in. It's against accounting principles. And you know that if you don't get the loan, you're going to lose your job. This is a tough ethical issue. I'm not going to say anything. I'm not going to put it on a test, but it's something you may be forced to do if you go into accounting. Hopefully not. It talks about financial ratios, liquidity, leverage, performance, activity. And liquidity means to turn your assets into cash. For example, Sears is in trouble. They sold off the Craftsman line. It's a highly reputable brand. However, that is part of their lifeblood. I personally would say that was a grave mistake on their part. I am hoping the store stays in business. They keep closing shops. Or stores, I should say. You got leverage ratios, your debt to your equity, and you don't want that is on the balance sheet. These are things you want to look at. Like, let's say you're buying stocks. Are you just going to buy a stock in XYZ company because it's glamorous and they make the greatest looking cell phone case now? I think you know what I'm saying. Profitability ratios, earnings per share, that helps, but sometimes they can be cooking their books to inflate it so that way it inflates their stock price. Activity ratios, if the inventory is turning over a lot, that is good. If it's just sitting in the warehouse and they got pet rock sitting in there for the past 40 years, you're in trouble. And then we talk about multinational companies where they now have international standards. If you ever get a job at an international company, great skill set to have. And it talks about the move to this system.